In this video, we're going to walk through how retailers and brands can sell in-store subscriptions at brick-and-mortar checkouts to increase overall revenue, improve unit economics, and expand market share. My name is Eric Andrews, and I'm the Director of Commerce Strategy here at Ordergroove. And in the next few minutes, based on the benchmarks that we're collecting with our merchants, I'm going to show you the type of impact brands see when they launch in-person subscriptions. Okay, let's get started. Okay, so before we dive into today's lesson, I just want to talk about who this lecture is for. So this is for brands and retailers looking to understand, number one, the revenue opportunity behind offering in-store brick-and-mortar subscriptions. So if you do this, how much can your revenue go up? And number two, the unit economics of subscribing online versus in-store, and also shipping to home versus picking up in-store. There's some very different contribution margins, some very favorable contribution margins when you do things in-store, so we're going to dive into all of that. Now today, first we're going to talk about wallet share and why this is so important for today's discussion. Then we're going to look at a scenario where a brand launches in-person subscriptions, the types of conversion rates they see, and how much it actually increases their revenue based on the benchmarks that we see with merchants that we work with. And then we're going to talk about the unit economics of, again, in-store versus at home. So we're going to get into all of that. So let's talk about wallet share. So wallet share has to do with how much you're transacting with each of your customers and how much that customer is spending per year on a certain category. So let's say we are business A, we have brick and mortar locations, and each of our customers buys 2 times per year from us right now. But in the category that we operate in, each of our customers actually makes 20 purchases per year across a bunch of different brands. So right now we are at 10% of their wallet share. They're transacting with us for only 10% of their needs. Now the idea of why to launch subscriptions is that you can grow your wallet share. So if we start getting our customers and offering them subscriptions in the stores and converting them into subscriptions, let's say now they're purchasing from us 6 times per year, but still their annual purchases in our category is only around 20 times per year. So we've grown our wallet share from 10% to 30% with each of our customers. And this allows us to do a lot of business growth just with our existing customer base without actually having to acquire new customers. So competing for wallet share is sort of the core business case for why to launch subscriptions and offer subscriptions to your customers. Now let's talk about what that looks like with sort of business before launching in-store subscriptions and after, based on the kind of conversion rates that we see. So let's say that you have a business, and right now in the first year you have 20,000 customers. Each of those customers is making 2 transactions, as we saw up above, so that's 40,000 transactions. And let's say that the average order value is $50. So this business is making $2 million in revenue, 40,000 transactions times $50. And within the year, each customer is basically generating $100 of revenue. This business has no subscriptions, and they're curious, what if just within my 20,000 customer base, I launch subscriptions and move some of those customers over to subscriptions? What happens? Does my revenue go down? Does it go up? So these are the types of numbers that we're seeing. So when brands launch subscriptions, we generally see an in-store conversion rate, or sometimes we call this an enrollment rate, of around 10%. So around 10% of people will basically enroll into a subscription loyalty program. So what this would imply is that 2,000 of our 20,000 customers move to a subscription plan. So to get them to do that, you generally need to offer a discount. So let's say we offer a 10% off discount. So that's $45 as their AOV. And so what this means is that these 18,000 customers, they buy twice, that's 36,000 transactions. But these 2,000 customers are now buying 6 times. So that is 12,000 transactions. So you see we've actually grown the transactions by 20%. Now you can see our AOV has gone down just a little bit, on average by 3%, because still the vast majority of your customers do have a $50 AOV. And then if you look at the revenue, that's just the number of transactions times your AOV, your revenue has actually grown 17%. And then you can see your subscribers, they spend $270 within the year versus your non-subscribers spend $100 within the year. So your average revenue per customer within the year has actually gone up 17% without acquiring any new customers. And these are the types of numbers that we are seeing with brands that launch in-store subscriptions. It's a really, really powerful way to grow your revenue. And this is just within the first year. These subscription customers compound. And so that subscription business usually grows to be a larger and larger share of the overall business within a multi-year period. Okay, so now that we've looked at the overall revenue lift, I want to talk about the underlying profitability of this revenue. So to do that, I want to look at the unit economics of customers who subscribe in store versus online, and then customers who ship to home versus pick up in store. There are some very different profit margins for each of these customer segments. But before we do that, I want to say one quick thing. If your brand is looking to drive recurring revenue by launching in-store subscriptions, Ordergroove is designed to deliver unmatched customer experiences that extend lifetime value for ambitious, fast-growing merchants with large order volumes. The leading brands and retailers in the space have chosen Ordergroove to power their subscriptions, including companies like the Dollar Shave Club, L'Oreal, La Colombe, PetSmart, and many more. If you're doing over $1 million in subscriptions and need advanced capabilities like in-store, prepaid subscriptions, memberships, and bundles, or if you're on a homegrown system and want to lower your technology costs and innovate faster, come book a demo with us to learn how you can take your customer attention and recurring revenue to the next level. Also, you can download this Excel template linked in the description below, and don't forget to follow Ordergroove on LinkedIn to stay up to date with the latest subscription and recurring revenue trends. Okay, so now let's talk about the unit economics or the order economics of different subscription scenarios. So based on whether your customer subscribes in-store or online and whether they choose to receive the product shipped to their house or they want to pick it up in store, the economics of sort of these four scenarios are all very different. They have different contribution margins. So I want to highlight where you have the upside so you can guide customers towards the most profitable activities. So again, as I mentioned, you can subscribe online or you can subscribe in store, and then customers can have their products shipped to home or they can pick them up in store. So again, if you subscribe in store, you can have them shipped to your home, or if you subscribe in store for the first time, you can also go back and pick them up in store. And the idea is that in order to grow your wallet share with your customers and transact with them all the time, it needs to be very convenient. You don't want to lock your customers necessarily into one of these options if that's not best for the customer. So actually at Ordergroove, we have a patent for something we call subscribe anywhere, pick up anywhere, which makes this very frictionless and simple for customers. So whether customers subscribe online or in store, they actually have the option with each order to receive their products shipped to their house or walk into any store anytime they want and pick up their next order. And then their subsequent order is automatically updated based on whatever is easiest for them. So you want to make these simple and low touch for the customers so that you can grow the wallet share with them over time. So let's talk about the economics of these different scenarios now. So in subscribe online, ship to home versus subscribe online, pick up in store, generally the subscribe online, pick up in store, let's say this is similar to the scenario that we had up above where our AOV was $50 and then we gave them a 10% discount and then it was $45. So if they pick up in store, there's no shipping. If they subscribe online and then they ship to home, let's say that we are charging customers an extra $15, so that's $65. Some brands do free shipping over a certain order value, but in our scenario, let's say that we are charging for it because we're under that threshold. And so if you subscribe in-store and pick up in-store, it's the same 50. Subscribe in-store, ship to home, it's the same 65. So you can see we have different average order values based on how the customer wants to manage their subscription. Now from a COGS standpoint, we have the cost of the product and the cost of fulfillment. So if they subscribe online and pick up in store, fulfillment will be $0. And let's say that the product costs $25. Now if they subscribe online, ship to home, again, product costs $25 in every scenario. It's the same amount of product. But let's say fulfillment here is $15. So ship to home is $15. We charge an extra $15 for shipping, and then it costs us $15 more. So you can see that the COGS vary. But when you look at the actual gross profit, 59 minus 40, it's $19. And then here, the pickup in store, it's $20. So in all four of these scenarios, the gross profit per order ends up being roughly the same amount, although the pickup in store numbers have a higher gross profit margin as a percent of revenue. One thing I didn't include in this analysis, but that we really see when brands do launch pickup in store, is that you see a lot of halo purchases. So when customers go to pick up their subscription, they buy other items that are transactional or one-time purchases. So generally you will see a bigger lift over the customer lifetime. So that can further increase the wallet share with your customers. So that's another lever. But now let's talk about the difference between acquiring customers in person versus acquiring them online. So generally when you're acquiring customers online, there's a marketing investment to get them to buy, to get them to your website and to get them to enroll. So most brands, let's say it's a big retailer that has a lot of organic traffic, but also runs some paid, and their blended CAC, let's say, is $25 for online. So in these scenarios, you can see that the gross profit on that first order is $19, but they spent $25 in CAC. So they're actually at negative $7 on the first order. And again, as the customer makes more purchases, they'll become profitable. And then buy online, pick up in store, again, negative $5. Now the advantage of enrolling your customers in person is generally most brands would consider their CAC in person to be 0 or to be close to 0. So immediately from a post-marketing gross profit standpoint, you're much more profitable on each customer. So you're making $19 on buy in-store, ship to home, and post-marketing gross profit just on the first order. And again, we consider that these customers will make many, many orders over their lifetime. And then buy in-store, pick up in-store, you're at $20. So that's the most lucrative segment. And that's not including the halo purchases. So the real full value of that would probably be higher. So as you think about in-store options, remember that the underlying economics on in-store are better than acquiring customers online. Understanding the in-store subscription opportunity can unlock tremendous revenue and profit. We hope this video has been helpful. Don't forget to like, subscribe, and leave a comment if you have any questions, and we'll see you again in the next e-commerce strategy guide YouTube video.